Welcome back to Investing with Confidence. I am your host, Joshua David. And if you're just tuning in, you miss Al getting into how the markets work with supply and demand, how they function, which is buyers and sellers, but which way is the market going to go? That doesn't matter, because if we control our investment decisions, we don't have to worry about what the actual market does or why it does it. We just need to understand how to trade like those institutions and not against them. If you happen to miss 2 tickets for the free investing class, call 952-814-4410. You can also text the word invest to the number 484848. You receive a link back. When you do that, click the link. You're going to receive 2 tickets for that, plus the Financial Quick Start Kit when you attend. Al, you want to get into this next topic of, I'll call it adding odds to a strategy, because it all comes down to adding the odds in your favor, kind of like a casino does. They always have the odds in their favor. That's why you see these big buildings in Las Vegas, right?
Big buildings.
Now, one of the key things that they do is they have a strategy, and they follow that strategy.
Right.
Talk about some of the other odds within a strategy, or a core strategy that may help people's investment decisions.
Yeah, well, and to put the odds in your favor, you have to have rules that you follow that actually do that to help stack the odds in your favor. But let me get back to core strategy for a minute, because that really kind of incorporates everything that you just talked about. I mentioned earlier that there is somebody or something that controls price movement. I'm calling them the elephants, the Wall Street elephants. It's the big players, people that have hundreds of millions or billions of dollars to put into positions or into the market. And the key then is to be able to identify what they're doing before they do it. What are they going to do, in other words? And if you can identify that, you know that when they are taking a position with that much money, that's going to move the price of something. I said before that there's that law, that economic law of supply and demand in the markets. It's the law of balance between buyers and sellers. When it's out of balance, something happens. When there's more buyers, price will go up. When there's more sellers, price is going to go down. And it's the big institutions that are creating that movement. The quality trade that our students try to achieve is a low-risk, high-profit, high probability of success trade. That's a quality trade. Those almost always happen at the turn in price. In other words, when price stops going down and starts going up, or stops going up and starts going down. That is almost always caused by big institutions with enough money to cause that to happen. So you can identify where the elephants are. You can just ride with them, jump on their back and ride them. They're showing us on a price chart what they're going to be doing, and that's what core strategy identifies.
Just to clarify a little bit more, too, when you have that elephant in the room, and you mentioned just now they're showing us where they're going with prices.
Correct.
Think of an elephant walking down a beach. What is it going to leave behind him? A footprint.
And some other things that
you're right.
you want to step in. But.
Yeah, well, if you're following, I know what you're doing. But when you understand that, you can trade like them or follow those institutions and follow their indication on which way that they're buying and selling.
Yeah. Doesn't that make it sound like it's almost easy?
It sounds
the concept, simplified.
The concept is actually simple.
Yeah. You want to cut out the clutter. Let these guys do the work. They are the ones that are doing the analysis. They might be analyzing something for months or years to come up with their idea as to when to take a position, what price that they want to get into something. You know, you might spend a few hours or maybe no time at all, and you have an opinion based on something that may be totally different than what their opinion is based on. And I can tell you who's going to win that battle every time.
That's a great point, because we have a lot of listeners that probably think you have to analyze stocks. Well, do you think if you're listening right now, you can analyze a stock better than Goldman Sachs or better than Deutsche Bank or whoever these big institutions are, Buffett, right?
Yeah, right.
So here's a thing to understand and think about. If you can't do what they're doing, follow them.
Right.
And that's why you need that investment strategy. If you want to learn more about that, Al teaches investing classes on how to follow investment strategies. So text the word invest to the number 484848 for 2 tickets. When you do that, we also have an online version as well. So you can text the word invest to the number 484848. click the link to pick a date for that investing class. Now, continue this discussion about these odds and everything.
Right.
And I mean, we have a lot of listeners that are looking to create extra income. So they're looking for income potential now, but they don't want to go look for another job, right? It seems like nobody wants to work these days, but we're seeing more and more and more people.
Job, right?
Yeah, you're seeing more and more people look at the financial markets to have that potential. So what are some of the odds you can do if you're looking for income potential in these markets?
Well, that's one of the things that you need to add to the core strategy is what is your goal? What is your expectation of or from the market? And if it is to generate additional income, then you need to use something that helps you do that's going to get you to have the opportunity to generate or create that income on a short-term basis. It's not a long-term strategy. And that's what, unfortunately, most people are put into is something that is intended to be long-term. That really it's a great business model for the financial advisors, for the Wall Street firms out there, because they're telling you they're going to help you put together a portfolio. You give them your money that you have earned somewhere else. They put it into something and then just let it ride for years and then charge you fees. If you need something short-term, you can't use that. It has to be something that is really intended as a get in, get out on a short-term basis, kind of an asset or strategy. And short-term is different for different people. So some people may be trying to find daily income. Some people are looking at weekly or monthly income. That, again, gets back to the fact that this needs to be customized for you. But the strategies that people use that are really ideal for that income need, achieving the income needs now, are things like the futures market, the foreign exchange market, the options market.
I was going to ask you about that. I mean, most people look at the stock market to create income, to have income potential.
Yep.
That's not really the best place to be because it takes the most capital.
Exactly.
It's only open 6.5 hours a day, which is when people are probably at work. So with these futures and Forex markets you just mentioned, do you have the opportunities to trade in the evening? How does that work? Do you have to be in other countries to do that? Explain that.
No, you can be anywhere you want that you have internet access and you can trade. Futures and Forex trade essentially 24 hours a day. So you have choices there as to when you can participate based on your schedule, or maybe you find that the strategy, the type of strategy that you're using does better in the evening or better early in the morning. You have the opportunity to do a better job of kind of fine-tuning your trading. The other thing is that people, you mentioned stocks. Right now, stocks are most highly overvalued that they have ever been.
Yeah.
It's not the best place to be right now for somebody, especially if you're looking for achieving short-term income goals.
So let me ask you this then. So if they're at all-time highs, talk about the concept of down markets real quick.
Correct.
So our listeners understand how to capitalize potentially in down markets.
Well, and that's the other thing. What you need to add to the core strategy is the understanding that the market can go in three different directions. It doesn't just go up, but unfortunately, most of the people listening to this show are in a portfolio strategy that will only benefit in an up market. It's a buy-biased strategy without really a consideration of trying to benefit in a down market. It's basically that just hold on, don't worry, the market will come back. But listen, the market is down a significant amount of time, and it's sideways and down more than it is up. So if you're missing out on those two opportunities, you've missed out on a lot of potential to build what you might need to rely on down the road when you go into retirement. And there's different ways of participating in a down market. In these classes, I talk about this in these classes, the different ways you can do it. You can use what we call inverse exchange-traded funds. You can use options. You can sell futures. You can sell Forex contracts. And you can also do this thing called shorting. Mm-hmm. This is a game changer, and it's come into the class, and let me explain this to you, because most people, when we go over it, look at us and say, well, that sounds illegal. How can you do that? It's such a great thing, a great concept that we are able to participate in if you just understand how to use it.
Yeah, and that concept doesn't make any sense. I mean, I was doing a podcast with one of a good friend, Tim, this is probably a year and a half ago, and we were talking about the concept of shorting, which is benefiting or profiting in down markets.
Yep.
And he said, the concept doesn't make any sense. He said, think of it this way and don't even worry about it. He says, It's because you can.
You can.
So that's
Yeah,
all the
yeah.
concept really is. If say a stock is at $10 and you think it's going to go down to $8, you basically just sell it first and then open it high and close it low. It's the same concept.
Yeah.
So that's why when you have a 3-directional strategy, there's more odds in your favor.
Right. Yeah, you want your portfolio to be positioned in a way where it can be multi-directional, and there are also some assets that you can use where it doesn't make any difference which direction the market is going, you can still benefit. But if you're not looking at participating in a down market or sideways market, and even worse yet, if you're not protected, ask yourself this: what would happen if tomorrow we started maybe a 50 to 60% market correction or crash? Would that impact your portfolio? And if so, why hasn't somebody talked to you about how to prevent that from happening? Has it happened before? Well, in 2008, we had a market correction. Every $100,000 that you had ended up being $43,000. That's a huge drop. And basically in 17 months, 12 years worth of gains were wiped out. It can happen quickly. So being protected is important. But why not, if the market is going to go down quickly like that, why not participate? Because somebody is. Not everybody is losing when we have a market correction. In fact, it's the elephants, guys like Warren Buffett, the big firms, the hedge funds. They actually look forward to that, and we do too. I mean, I think the biggest opportunity for me and for us to benefit is going to be in the next big downturn.
You're right.
It's not that we're sadistic. We're just looking for another great opportunity
That's
which
the key,
that
Al.
presents.
That's the opportunity. And just think of it this way. A good analogy is if you're going to go climb mountains, right? You're going to go to Colorado and you want to go mountain climbing. Are you going to stop or start near the top of the mountain and just go up when you can only go up a little ways? Or can you start at the top and then go down? There's an opportunity to go down a mountain.
Right.
But you probably want to start that mountain on the bottom, have opportunity to climb it, but also if you want that opportunity to go back down, you can do that as well. Same thing in investing. Buy low, sell high, or sell high and buy low. Concepts, and so you can have opportunities in any type of market. If you want to learn more about that, Al teaches investing classes right here in Bloomington, talks about how to improve your overall financial literacy, or maybe you just want to learn more self-directing opportunities. So callers 1 through 10, when you call in right now, you're going to receive 2 tickets for a free investing class, one for you and a friend. Call 952-814-4410. That's 952-814-4410. You can also text the word invest to the number 484848. You're going to receive a link back. Click the link. Pick a date for the free investing class. You also get the financial quick start kit when you attend. Al, what do you got coming up next?
Well, this sounds kind of crazy, but let's talk about why a mirror might be the best tool to help you realize your retirement goals.
That sounds like something interesting. Every time I look in the mirror, I see Brad Pitt, so I don't know what the heck
because
we're
you have a
talking about
picture
there.
of Brad Pitt taped to your mirror.
Coming up next. Once again, for 2 tickets for the investing class, call 952-814-4410. This is Josh and Al, Investing with Confidence. We'll be right back.